Alphabet is up 60% year to date with the who's who of investors piling into this name. So what is it about Alphabet that's causing the mad rush into this stock? We're gonna dig into exactly that in this second part of this two-part series on Alphabet. You're watching More Money? Let's get it. What's up everyone? Thanks so much for tuning in. I'm Tay, and you're watching the #1 channel on YouTube for people that want to retire early. In part one of this two-part series, we went over Alphabet and what's driving business into the future. In this video, we'll go over how I'm modeling all of that info to suggest that there's still a 20% upside for this name. So let's jump right into it. Now remember guys, you can download that model from the description below. Now the first question that you guys are going to ask with the valuation is, why did I forecast the results out using 5 years before doing the valuation? Why not just throw a multiple on the 2021 expected earnings per share? The reason really is because we have a company here that is fast growing and each segment is unique in its revenue growth profile. So I wanted to accurately reflect that. Also, Google Cloud is currently not generating operating revenue, but I strongly believe that this will turn in about 5 years. So by using a 5-year model, we will have a more accurate reflection of the operating margins of the overall business that Alphabet does have. Now let's dive into the forecast of these segments for me to explain the points that I made in the first video, just more visually in the model. In Google search, from here you can see that even in 2021, Google search on its own is still expected to be the largest part of the company with 58% of overall revenues. Now, one thing to note is that the growth of Google search has been slowing to the low to mid double digits over the past decade or so. This makes sense because it's largely an established business and is chugging along and growing at a slower rate, as you would expect with most businesses as they reach maturity. Now, I'm not saying that Google search has reached its maturity. I'm saying that it's more mature than what it was when it was younger. And so obviously the growth is slowing. Now, take that with a grain of salt, because in 2021, what we are noticing is a renewed growth in search, which is trending to grow search by 30% year over year. Note that part of that is due to lower spending on Google search in 2020 due to the COVID pandemic. So those marketing dollars are now finding their way back into search now as things are reopening. And secondly, it is my suspicion that there's a higher dedicated spend in 2021 with a renewed focus on digital marketing as more and more businesses move into the omni-channel space. Digital marketing has never been more important than it is now in the post-lockdown environment. Whether we want to believe it or not, the economy has fundamentally changed. We were just locked down for way too long. Now, that being said, although I absolutely expect a near-term bump in the growth of search, I don't believe that the trend of 30% year-over-year growth in search will continue indefinitely. I think it'll be something closer to the 4-year CAGR of 18%, which is more realistic. So you'll notice that I'm forecasting growth in search to be approximately 15% over the next 5 years. I think that's absolutely reasonable. I also believe that they're going to blow those expectations out of the water in the near term, i.e. 2022 and 2023, but I'll leave that as an upside surprise to my valuation. Download the model and change those expectations if you feel as though they'll grow faster. Moving on to the YouTube segment. Although YouTube is around 16 or so years old, I think we're all just starting to see YouTube start taking off in terms of revenue growth for Alphabet. As you can see from the model, YouTube has experienced a 4-year CAGR growth of revenue of approximately 34%. Most of that growth is related purely to the growth in YouTube ads. The one thing that everyone is sleeping on are the new revenue streams that they are creating for YouTube channel creators. I did quickly go over these in the first video, but I wanted to point out 3 that are due for explosive growth. From here, you can see all 10 ways that YouTube creators can earn revenues from their YouTube content. And of course, YouTube takes a cut. Now, the 3 that I wanted to point out are Super Chats, memberships, and Brand Connect. More and more creators are realizing that the best way to grow your audience is through having live streams. And I believe the reason for that is because it allows you to build a deeper connection with your most dedicated viewers. And one thing that your audience can do to have their comments acknowledged in the live stream is by purchasing a Super Chat. This highlights the comment and brings it to the attention of the live streamers, and the live streamers will generally acknowledge it and respond to it. As more and more creators host live streams, I believe that revenue from this will continue to surge. We are already starting to see that. The second item that I think is about to explode is memberships. This is big, guys. Many creators, including myself, are currently using third-party services such as Patreon to generate membership type revenues. Why not keep it all in-house, which is exactly what YouTube is trying to do here. I think this works as I'm seeing more and more creators offer channel membership perks. Finally, with Brand Connect, this is the future of influencer marketing. YouTube has set up a platform which makes it easy for organizations to market their products and services via influencer marketing by using Brand Connect to create partnerships with creators. Social media influencers are the future, and it's just inevitable that Brand Connect can be a huge success for a YouTuber's revenue growth. And you can see that I'm seeing a very bright future for YouTube. In 2022, I'm growing the revenues at 30%, and then I'm stepping it down to 25% for the next 2 years, and then stepping it down once again to 20% in 2025. Do I think YouTube can surpass this revenue growth forecast? Absolutely I can, but I'll leave it there for now and let there be some upside surprise. Once again, you can download the model and change these numbers as you wish. Your valuation will only be higher if you think that YouTube will do better than what I'm projecting it at. Now, I don't want to spend too much time with the Google Network member properties. They haven't given us much information nor guidance here. It's trending to grow at approximately 25% in 2021, which is huge. And from there, you can see that I stepped it down a bit in 2022 and beyond because their 4-year CAGR is only 13%. Unless I have more information here, I can't be excited about this segment. With Google Other, this includes revenues from Google Play app and all of their hardware and YouTube non-advertising revenues, which I think is mostly the YouTube Premium service. I do think that Google has a strong slate of hardware products and a key grip on the non-Apple cell phone operating system market, so I think this segment continues to show strong growth. From here, you can see me forecast this segment at just under their 4-year CAGR of approximately 25%. I'm giving them 20% till 2023 and then stepping it down to 15% thereafter. I think there is upside surprise here, but I'll leave it there. Now, moving on to Google Cloud. Google Cloud is all that the company is talking about right now, and it's all that anyone is interested in. I think that's a mistake because I showed you the other segments which are doing exceptionally well. But it makes sense for them to talk about Google Cloud as much as they are because it's identified as a once-in-a-lifetime opportunity by the Alibaba CEO. But we need to put Google Cloud into perspective. Google Cloud right now is 7% of the company's revenues, and if it grows at 30% each year until 2025, it will still only reflect 11% of Alphabet's overall revenues. Now, with Google Cloud, they have been seeing rapid adoption, and every player in this space is seeing immense levels of growth as well. This is largely because the cloud industry is growing at phenomenal rates. Google Cloud executives believe that the industry is in its infancy and could almost triple in the next 5 years. We are seeing this in the results of Google Cloud's revenues as their 5-year CAGR is a massive 44%. Do I think growth at the rate of 44% a year is possible for the next 5 years? I don't think so, but I think fast growth is still possible. From here, you can see that I'm forecasting Google Cloud to grow at a rate of 30% into 2025. How crazy is it that I actually believe that they can probably do better than this? Will I forecast it into my valuations? Not at all. I'll leave it as an upside surprise. Now, you will notice that when it comes to forecasting out the profitability for each segment, I've largely left them alone except for Google Cloud. Google Cloud is currently not generating revenues, as you can see from the negative 18% operating loss expected in 2021. But I'm forecasting that to turn around in 2023 and achieve a small operating profit margin and then develop into its full potential profitability by 2025. Some may argue that this may be a bit aggressive and the company needs more time to achieve profitability. I get that. That's the beauty of valuations. We can all make tweaks to the way that we see the business ourselves. So that takes us to our valuation. I have no doubt in my mind that Google will be trading at a market premium PE multiple in 2025. And so my valuation assumes that the multiple that they will command in 2025 will be 25 times earnings, which is down from the current 30 times earnings that they command today. Now, can I be wrong here? Absolutely, but it's what I'd be willing to pay for future growth at that time. With that said, I've added the cash hoard to the valuation and got a discounted valuation per share of approximately $3,200, which is a 19.5% premium to the current share price of approximately $2,700 per share. Now, is Google a buy at this price? Now, I like that it's a 20% upside. It's still cheap growth, but I would personally like to see a 35 to 50% upside or so to my valuation, especially since I'm using a premium multiple. And if we're really being honest, I probably won't buy it unless there's like 100% upside. I really need that margin of safety. So ideally, in a perfect world, I would love to buy this at around 16 or 1700 bucks a share. So although it's sad that I can't buy Google at the moment, I will be on the lookout for cash secured put opportunities. At the end of the day, Google has and will continue to change the world. Therefore, it is a company for me to keep an eye on, which is exactly what I'll be doing. That's it for the valuation, guys. I hope you guys really gained some value. If you're new to the channel, please subscribe, as there's gonna be more stuff coming forward like this. Also, in October, we're gonna be doing Options October. I'm gonna try and write 12 videos to really dive into options investing. You guys always ask questions on options, so I'm gonna go deep into it. Now, with that said, I'll leave it there, guys. Please smash the like button if you haven't already. Also, leave a comment. Let me know what companies you want me to cover. The reason why I'm even covering Google is because somebody mentioned in a comment that they wanted it to be covered, so that's why I'm doing it. I love to cover exactly what you guys are looking for. I'll leave it there, and I'll see you guys later.